The day I inherited 2,500 acres, I didn't celebrate. I drove straight to the highest hill on the property. And that's when I saw it. An entire HOA community, sitting right in the middle of my land. Clubhouse, pool, parking lot, private road, all neatly tucked inside acreage that now legally belonged to me. And they had no idea. My grandfather wasn't flashy, didn't drive luxury cars, didn't brag about investments, but he bought land. A lot of it. Farmland, timber, lakeside parcels, forgotten stretches developers overlooked decades ago. When he passed, the estate lawyer called, "You're the sole beneficiary of approximately 2,500 acres." I thought he was exaggerating. He wasn't. The first time I saw the survey overlay, I leaned closer. The southern boundary line ran straight through a developed suburban neighborhood. Not the houses, the land beneath their community center, the HOA clubhouse, the parking area, even the private access road they proudly gated. All of it. Leased land. Leased from my grandfather. On a 30-year agreement. That expired. Last month. Here's the part that shocked me. The HOA board never renewed the lease. They assumed it auto-renewed. It didn't. My grandfather was old school. Contracts were written. Renewals required signatures. No signature, no renewal, no land rights. I didn't send letters immediately. I visited. Quietly. Pulled county records. Confirmed the deed transfer. Verified lease expiration. Triple-checked. Everything was airtight. The HOA clubhouse, pool, and entry road sat on land now fully under my name. Clear title. No encumbrances. No extensions. I emailed the HOA board. Professional, calm. Subject, lease expiration and property review. I explained the lease had expired and requested a meeting to discuss terms moving forward. Their reply? 3 words. This is incorrect. Her name was Diane. Polished, sharp tone, confident. She scheduled a meeting in the clubhouse, on my land. I walked in with copies of the original lease, expiration date, county transfer record, property survey, updated deed. She walked in with attitude. "We've operated here for decades," she said. "This land belongs to the community." I slid the deed across the table. "It belongs to me." Silence. Board members leaned forward. She didn't look at the document immediately. That's when I knew. She didn't expect proof. "This must be a clerical oversight," she said. "It's not," I replied calmly. The lease ended. No renewal was signed. No payment issued. One board member whispered, "Wait, we stopped lease payments years ago." Diane shot him a look. Too late. Turns out previous boards assumed the lease was permanent. They budgeted for landscaping, for pool maintenance, for events, but not for land rent, because they believed the land was community-owned. It wasn't. It was rented. For 30 years, and they forgot. Here's what happens when reality hits a room. The loudest person gets quiet. Diane finally opened the lease document. Page 4. Term, 30 years. Renewal. Written agreement required. Lessor signature required. No exceptions. She looked up. "We'll need time to review this." "Of course," I said. "But access to my land is currently uncontracted." That landed heavy. Their entire gated entrance? On my property. If I blocked access legally, their private community would have to reroute traffic through a county road not built for it. Emergency services included. They knew it. I knew it. A week later, Diane called. "We're willing to continue previous terms." Previous terms were laughable. The lease rate from 30 years ago, below market value even back then. Inflation alone made it absurd. I replied, "Market conditions have changed." I hired a commercial land appraiser. He evaluated clubhouse footprint, pool facility, parking lot, access road, liability exposure. His conclusion? Current fair use commercial lease value, 5 times the original rate, minimum. I sent a formal lease proposal. New rate, 5x previous. Term, 10 years. Liability insurance required. Retroactive use fee for current month, professional, clear, legal. The emergency HOA meeting was louder than I expected. Homeowners weren't angry at me. They were confused. Why didn't we know about this lease? Why weren't payments budgeted? How did this expire? Diane blamed legacy documentation issues. That phrase means we didn't check. She tried intimidation next. If you push this, we'll challenge it legally. I stayed calm. You're welcome to. Because I wasn't guessing. I was documented. Here's what they didn't understand. I didn't need to evict them. I didn't need drama. The law was simple. They were occupying private land without a valid lease. That's leverage. 2 days later, something interesting happened. The HOA's bank requested confirmation of land control because the clubhouse was listed as collateral in a small renovation loan, and collateral can't sit on land you don't control. Now it wasn't just rent, it was financing risk. Homeowners began demanding transparency. Past board minutes were pulled, financial statements reviewed, lease references almost non-existent. Somehow 30 years passed, and no one renewed the most important contract in their community. She sent one last email to residents. We believe the land claim may be overstated. Maybe. That word saved her from direct liability. But it didn't stop the panic. I wasn't bluffing, and I wasn't emotional. But I was prepared to do one thing they weren't expecting. If negotiations stalled, I could legally restrict road access for non-residents, not block homeowners, just external vendors, pool services, event rentals, landscaping trucks. And without service, facilities shut down. Quietly. They thought I was negotiating. I wasn't. I was waiting. Because when systems collapse, they don't do it loudly. They do it financially. Diane hired an attorney. Big firm, polished letterhead, aggressive tone. The letter claimed implied easement through long-term use. Community reliance rights. Adverse possession considerations. It looked intimidating. Until my attorney read it. He smiled. None of this applies, he said. Why? Because you can't claim adverse possession when there was a signed lease, and you can't claim implied easement when the agreement explicitly expired. Their legal threat? Smoke. Remember that renovation loan? The bank didn't like uncertainty. They sent a compliance inquiry to the HOA board requesting proof of land control, active lease documentation, confirmation of access rights. They had 10 business days. They didn't have the paperwork. Next problem. Their insurance carrier requested updated liability coverage documents tied to land ownership. When the carrier learned the land was privately owned and the lease expired, they flagged it. If a child slipped near the pool, if someone got injured in the parking lot, the liability exposure shifted toward the HOA, toward the board, personally. Now this wasn't about ego, it was about risk. An emergency town hall was scheduled. Packed room, no snacks this time, just tension. One homeowner stood up. How did we not know our clubhouse wasn't ours? Diane tried to redirect. We're handling it. Wrong answer. Another voice. With what money? Because quintuple rent wasn't small. It meant increasing dues, significantly. The original lease amount was so low it barely touched their annual budget. My proposal? It would require either a 40% increase in monthly dues or eliminating amenities. No pool heating, no event budget, no landscaping upgrades. Reality hurts. Day 9. The bank sent a follow-up notice. Failure to provide proof of land control could trigger loan reassessment. Translation: they could call the loan due, and if that happened, special assessment. Thousands per household. Overnight. She called me again. This time the confidence was gone. What if we meet in the middle? I listened. She offered 2x the original lease, still far below market. I responded calmly. My proposal already reflects market value. The appraisal supports it. Silence. Then she tried emotion. You're hurting families. No, I wasn't. Negligence did. I filed something simple with the county. Formal notice of lease expiration. Public record. Now it wasn't just a private dispute. It was documented. Any lender, insurer, or attorney could see it. Pressure increased instantly. 3 days later, a landscaping truck arrived at the clubhouse. I had already informed the HOA in writing that commercial vendor access required temporary land use permission. They ignored it. So I did something simple. I denied the vendor entry through the private road. Politely, legally, the truck left. The grass didn't get cut. Residents noticed. Diane's inbox exploded. Why is maintenance halted? Why are services interrupted? What's going on? She couldn't blame me publicly, because legally, I was right. 2 board members requested an independent legal review, not their attorney, an outside opinion. That's when cracks widen, because when your own team questions you, control slips. It came back brutal. The review confirmed, lease expired validly, no automatic renewal clause, no adverse possession claim possible, continued occupation without agreement, liability risk. In short, they had no leverage. At the next HOA meeting, Diane was no longer leading confidently. She was defending herself. One resident asked directly, "Did you know about the lease expiration before it ended?" She hesitated. That pause answered everything. A motion was raised. Authorized negotiation at market rate to avoid financial collapse. It passed. Not unanimously, but decisively. This time, 4 board members showed up. Not just Diane. No hostility, no threats, just numbers. They accepted 5x original lease, 10-year term, liability coverage, annual escalation clause, signed, stamped, recorded, dues increased. Residents weren't thrilled, but they understood. The alternative was worse, much worse. 2 weeks later, a special election was held. Diane didn't run again. She cited personal reasons. Translation: trust evaporated. The new board president requested something unexpected: transparency workshop, financial literacy sessions, full contract review of every HOA agreement. Because if one 30-year lease could be forgotten, what else was hiding? I didn't celebrate. I didn't gloat. I simply enforced what was mine, calmly, legally, firmly. The new lease was signed. Money started flowing. On paper, the crisis was over. But financially, it was just beginning. Because when you raise dues by 40% overnight, people don't forget why. And they start digging. The new board president, Mark, wasn't flashy, but he was methodical. First action: independent financial audit of the past 10 years. Not just the lease, everything. Landscaping contracts, pool maintenance, vendor renewals, reserve funds. If something could expire, he wanted to see it. 3 weeks later, the auditor presented findings, and the room went quiet. For 12 years, the lease line item had been listed as long-term fixed community asset, not lease expense, not land rent, asset, which meant for over a decade, boards treated rented land like owned property. That wasn't just careless, it was misleading. One homeowner whispered, "So we've been budgeting wrong for years?" Yes, they had. Because if you assume ownership, you don't prepare for renewal. You don't reserve funds. You don't escalate planning. You relax until reality invoices you. Here's where karma sharpened. The audit team requested archived board communications. They found something interesting. 5 years ago, a former treasurer emailed Diane, "Lease expires in 2026. We should begin renegotiation early." She responded, "It's grandfathered, not urgent." That email aged badly. Residents began asking, if leadership ignored a known expiration, is that negligence? That word matters. Negligence can mean personal liability, removal from board eligibility, civil action. The tone of meetings shifted from frustration to accountability. Even with the new lease signed, finances were tight. The HOA needed to rebuild reserves, cover legal consultation fees, adjust insurance premiums. Mark proposed something bold: no special assessment. Instead, cut non-essential spending, eliminate vanity upgrades, pause clubhouse renovations, reality over appearance, First thing removed from the budget? Executive landscaping enhancements. Translation: the decorative entrance fountains Diane loved. They were shut off. Residents noticed. 1 month later, the HOA hosted an open accountability session. Diane attended, not as president, just a homeowner. Questions weren't cruel, but they were direct. Why wasn't the lease tracked? Why was it categorized as an asset? Why were renewal discussions ignored? She answered carefully. I believed it was secured long-term. Belief isn't documentation, and documentation is what matters. Here's what most people don't understand about HOA leadership. It's volunteer, but fiduciary responsibility is real. The board voted to bar former officers from future leadership positions if found negligent in contract oversight. It passed. Diane couldn't run again. Not next year, not ever. That was karma's signature. Once the new lease was recorded, the bank relaxed. Loan remained intact, but interest rates adjusted slightly due to structural risk review. That tiny increase? A reminder. Mistakes compound. Something unexpected happened. Residents started showing up more, not to complain, to participate. Finance committees formed. Contract review teams volunteered. Transparency became culture, because once you see how fragile control can be, you protect structure differently. I sent one more letter, not demanding, not aggressive, an offer. If the HOA maintained timely payments for 5 consecutive years, I'd lock the lease rate without additional escalation, stability in exchange for responsibility. They accepted, because now they understood contracts. Months later, I drove through the southern boundary road. The clubhouse lights were on, kids were swimming, the grass was cut, order restored. Not because someone dominated, but because someone paid attention. Karma isn't revenge. It's consequence meeting timing. Diane didn't lose because I raised rent. She lost because she ignored expiration. She assumed permanence. And permanence requires paperwork. At the annual HOA gathering, Mark stood at the podium. Our biggest lesson this year wasn't financial, he said. It was awareness. He didn't mention me by name. He didn't need to. Everyone knew. I still own 2,500 acres. Quietly, carefully, documented. I didn't quintuple rent out of spite. I aligned it with reality. Because land doesn't argue, it just sits, until someone forgets who holds the deed.